All right, welcome. Hello guys. Let's do a quick sound check. I believe sound is coming through and audio is coming through, so glad to be with you. Hi Grim, welcome. Yeah, let's get started, guys. Welcome to the trading room. Glad to be back to to the regular setup. Last week I was more in a house setup. Now we're back and running. So welcome everybody. My name is Saul. Glad to be with you. Elia, hi. Before we get started, please remember anything we're going to discuss here is not meant to be a buy or sell signal by any mean on any instrument on any time frame. This is only for educational purposes. So I just want to show you the way I approach the markets, and I read levels and charts, and hopefully you can take some for your own individual situation. Before we start, and by the way, as every Monday we're going to go through the economic calendar. We'll review the events we have the week ahead, and we're going to go to the larger time frames, the dailies, and we'll see key levels on the dailies, and we'll see if we have any mid long-term opportunity. We have some time at the end. We might go to lower time frames and also attempt to do some day trading or scalping or whatever it is. Before that, right here in your screen, a quick reminder of what's going to be the trading festival of the year. Guys, if you're in Europe or in the UK, you must attend this event. We're getting closer, just 2 months ahead, and if you register in the upcoming days, and if you go to the website, okay, if you scan that code, you will go to the website. If you register in the upcoming days, you will get a free trading account on the day of the event. So we've made sure it's going to be a super fun event. There's going to be like money booth and stand-up comedy, and it's going to be like music, and of course trading and the trading competition, and all the speakers and all the education and beer and food. And it's going to be very, very fun. A lot of networking and content, so you must get there and get your ticket, because they're just flying, and yeah, we're trying to just sell them out ASAP, even before the event. So if you're serious about your trading career and becoming a better trader, get your ticket now. Don't wait, and we'll see you there. It's going to be fun. Okay, with that, let's jump into the the calendar. Okay, let's review what we got during the week. So already today we had half an hour ago we got the Empire State Manufacturing Index. We'll see how that affected the market, but it's not a very important event, although it's marked as high volatility. It usually, and even though it came positive, you will see how the reaction in the market is not such as big. Okay, so we'll see which ones of the red marked events are actually high volatility and trend initiators during the week. Okay, so we got for Tuesday, tomorrow, we got CPI in Canada. Okay, so this one is the one we care the most, the median CPI year to year. So right now the inflation is in Canada at 4.9. They claim is going, or the forecast is that inflation is about to come lower, 4.5, and they are getting closer to the target of where inflation they want to see inflation in Canada. So we should see that already priced. We'll see how the chart is behaving over there. In case tomorrow we come short or we go over the number, then we will see a enormous reaction to that. But as long as we stay close to the forecast, we shouldn't see any more reaction to what already saw after the forecast being released. And inflation is coming lower, so I guess healthy for the economy, not as good for the for the demand of the currency, but it is what it is. Then on Wednesday we got CPI, same number, inflation numbers in UK. Finally, looks like inflation is finally being over control. It was all the time over 10%, and they weren't able to bring it down. So for the first time we see a forecast below 10%. Okay, now all the CPIs, and we have afterwards on Thursday we have CPI in New Zealand. They have the the numbers way lower. All these events, the CPI events, are important because in 2 weeks, at the beginning of May, we have, let me show you, April, first week of May, we have all the interest rates. Okay, so we have Australia interest rate, and then we have the Federal Funds rate in the US and CPI in Europe. So, and all these all these interest rates that are going to happen the first and second week of May. So the numbers this week are going to affect the final decision in 2 weeks of the central banks, whether they're going to keep increasing interest rates in their countries or they're going to stay where they are. So that's why it's so important to see the numbers of the CPI in each country during this week. As the higher the inflation, the more expectancy of having higher interest rates, therefore more demand for the currency. Okay, that's like the basic reading of that. And then on Friday we have all the manufacturing PMI, the German, the French, the flash services, all the PMIs, which those tend to bring like some jumps in the market, some volatility, and then continuation where the price was previously. Okay, so if I was to focus on something during this week, that would be CPI for the Canadian tomorrow, GBP on Wednesday, and this is and the Kiwi on Thursday. Okay, then on Friday expect a lot of volatility, but not a trend initiation because of that. Okay. Let me see the chat. So we got, so what's the safe percent of risk per trade to pass evaluation challenge? That would be a really individual answer. Silas 143. It really depends on the technique and the strategy you're using. I know very conservative traders who manage to pass our challenges, and those conservative traders tend to stay longer in their accounts, in their funded accounts. Of course, we have very aggressive traders who attempt to pass the challenges as soon as possible and in as less trades as possible. Some of them manage to make it, but the emotional reaction is way higher. So one of those traders that go against you really affects your progression. So I would tell you to risk the less possible you can make it, but still according to your to your strategy, so you can make progression. Okay, so I don't know, around 0.25% per trade, that would be a number, or 0.5% per trade, and in all programs you have kind of enough time to pass. So whether it's an instant or a boot camp, you have enough time. You shouldn't be rushing to try to make all the profit in one challenge, in one trade or something like that. So that would be a healthier way to make it. Do we get to keep the profits we make in the bootcamp challenge? So the bootcamp challenge, the demo phases or the challenge phases are run on demo accounts. So those trades are not going out to the market. So there isn't really profit behind those trades. So once you get funded, then you get a funded account, and now you keep your profits you make. It's not the case on the instant, where even this first step, the evaluation account, happens on a real account, and trades are being taken out to the market, and then you keep the profits also from the evaluation account. But on the bootcamp, it's all run on demo accounts, so there's no real profit in there, if you know what I mean. Okay, let's jump into the charts. One sec. Cool. So let's start with the euro. So we saw, or the pound, we saw, you know, the forecasts, and, you know, the CPI coming lower, and we say the lower the CPI, less demand for the currency. We should see a slightly weakening of the currency, and probably this is what we see. You know, this large, this bearish run, or this strong bearish candle. Those might be those reactions to those forecasts. We were last week, we were around those levels, wondering, you know, we were on the break and the retest, and we were wondering if we would, you know, break lower or continue higher. If that would be a break and retest setup, and then the continuation higher, or if we would fail and go lower. And the thing is, kind of both happens. You know, the reaction to the upside happened, but it was very, very weak. Okay, we can see we were unsure if it would react to kind of these levels or around, you know, that level. The reaction came out of nowhere, and we can see the reaction, how weak it is. And that's why as soon as we met past supply, okay, from back here, okay, that weak reaction to the upside, okay, it took 3 days to move, you know, that distance. As soon as we met that supply, we had a very strong reaction to the downside. Okay, so that's the strong reaction to the downside. So it looks like on the dailies, you know, it's unclear where is this going. On the short side, on the short term, I see no more demand. Okay, if we go again to the hourlies, we're back to, you know, where the reaction, you know, kind of where the reaction happens. We're breaking this previous demand. There's not a lot of demand here. We still have that demand, that extreme demand untouched. So we should be targeting those levels. So now, if I want to go into intraday trading, okay, or low-term opportunities, we have created a new supply area. I also want to confirm that movement, what it looks on the hourly as a healthy supply. I always want to confirm how it's formed on lower time frames, and as long as we're below that level, that supply, I want to be aiming or targeting for these levels. So on my very short-term target or short-term bias, I want to be bearish. On the long term, I want to be neutral, because I don't see enough demand yet to break, you know, that supply level. I don't see it. I don't see it nowhere. Okay, maybe there, but unless we get there, I want to see the reaction of the market once we get there, to see if there will be a strong reaction to break, you know, the dailies supply. And if we break to the downside of that level, then there's nothing. You can see there's nothing here, nothing here, not much here, probably all the way till down here for the next demand. So it doesn't look like there's enough demand here to make a break of that supply. But of course, you know, we got, and we just saw on the calendars, we have new events coming up in the week. So we have the CPI coming ahead. That might be the trigger, and that might be what it creates a fresh demand or a fresh supply to break either level. So if there was no news, or until those news, I want to be bearish biased, okay, because we're reacting from a strong past daily supplies, and we saw there's not much demand, okay, until down these levels. But I want to be careful when that event happens on Wednesday, if I recall right, because that CPI announcement might be what creates a new demand, and then yes, we will see a break of that supply. Probably we're going to go higher to the next supply area, which is up there. But until then, I want to be neutral bearish. Okay, probably I haven't checked that. Probably if we throw an indicator here, we might see a divergence setup. Okay, so what it looks like a higher high. Okay, we got the breakout. Okay, we had a resistance level here. We got a breakout, pullback, and continuation. So let's see how strong was that continuation. My eyes say that was a weak reaction. So that would be a divergent setup. Therefore, I want to be bearish. Let's try to confirm that. Let's throw relative. Where is it? Strength index. And let's try to confirm. So we're speaking of this movement, where it looks like a higher high, a slightly higher high. We have 1, 2. Okay, we see on the strength behind it, we have a kind of slightly bearish or at the same level of strength. So that's a divergence setup. So that confirms my neutral bearish bias for the short-term opportunities. But then again, I want to be careful. On Wednesday, everything might change. Okay, fresh demand might be created just in front of our eyes. That's what news events do. What charts is the 5ers pulling from on TradingView so we can do deeper analysis with more indicators? So we're not pulling charts from TradingView, but we do have, for example, Saxo Bank is one of our LPs. So probably the chart you're looking comes from, for example, Saxo Bank. So if you pull Saxo Bank on TradingView, you might see very similar, depending on the pair you're looking. But try, for example, Saxo Bank on TradingView. That should be very similar. Because we have different LPs, so I'm not sure which feed you're getting at any given moment. Matias, good morning from Uruguay. Good to see you. Sheriff, is AUD USD good to sell soon on the 15-minute? I don't know. Let's look at that. So that's for the GBP USD. A similar setup. We should see something similar as long as all this movement is also, affected or influenced by the USD. We might see similar setups on all the majors. So let's look at the AUD, which, by the way, I said I was also bearish biased on the dailies. We were breaking important support levels. We haven't reached yet demand on the dailies. We're breaking down, coming into with a compression channel. So we should see a reaction to the downside. That reaction came, but we really, we very quickly reacted to the upside. So we have a lot of mixed signals. So let's try to define some of the key levels we got there. So we have all of that. That's a compression channel. We have the reaction to the downside, not very strong. The reaction to the downside. So we have strong down movement. All of this kind of weaker, and then we have the full recovery. We did break that supply. Okay, we broke it completely, and then this spike looks like a news or something, which caused what it looked like a strong bearish movement. Okay, like a fresh supply. So that's the most recent information we got, which is a strong supply. I don't see a lot of demand, not much of demand. So I guess we're going all the way down to either these levels or these levels. So if your bias here on the 15-minute chart is sell, that would be my bias as well, short. The setup on the 15-minute chart would have to be like a breakout setup. So we got this supply, okay, supply. I want to be bearish. We've reacted already to this demand, so I do see the potential of breaking this support level We can also see how weak is the movement to the upside and how strong is the movement to the downside. Weak the movement to the upside, strong movement to the downside, and every time this support is tested, there's less and less orders to be filled, and eventually we can expect a breakout to the downside. Myself, I'm not a huge fan of the breakout setup, trying to catch the breakout of a support or resistance levels. I'm more I'd rather to wait to confirm the breakout and then to wait for the first retracement into that area. But if we have, okay, we can try. Let's take it. Let's see what happens. And then as a breakout setup, then the stop loss needs to be at the other side of the consolidation. Okay, if we go to lower time frames, we have some tiny supply there, so we want to give the market enough space to revisit those levels, and maybe after that to catch the movement to the downside. Now if we try to tune our stop loss, we might revisit that area. We might try to break to the upside and then meet some supply there, and then what it's like a false breakout on the 5-minute chart, really a reaction to that supply, and then a movement to the downside. Okay, so I want to see how prices behaves. Let me as point. Okay, I will not be managing this actively. When I want to, I will just approach it as a breakout setup. So we'll see if that eventually breaks or if it fails. Okay, when I find a setup, then I start managing my setups. But we'll see how that goes. And then the target for this setup would be probably there, and optimistic probably all the way down there. Okay, and these kind of movements, you can see these movements are the reason why I prefer to see the breakout, to confirm the breakout, and then the reaction. Okay, because many times you try to get the breakout itself, and a lot of time might happen before actually the breakout happens, or this might be a false breakout and you see the price going against you, all kind of things. So we'll see how that plays out. But the bias is there. I mean, we're coming from a larger perspective. We're coming from this supply and this reaction, which is also a supply. So after this setup, and if this one fails, I also have this area and that area to short. So as long as we stay below those levels, I want to be a seller. Okay, on the dailies, again, I'm kind of neutral. We're expecting a lot of news, and we're expecting a lot of CPIs to come out. So I want to I need to be like kind of neutral and expect this sideways movement to break after a trigger like those. Okay. Do you use TraderView for journaling or anything else which you can recommend us to use for journaling? That's a good one, Bornik. TradingView is a great tool. There's also trading. I can't remember the name. Trading Journal, Forex Journal. Can't remember the name, but there's TradingView is good enough. It's a good platform. Today I use either the dashboards or the report from the MT5. I kind of know where am I. I'm not any more concerned about my risk rewards, and I have such a systematic way to trade already. They kind of know my numbers, so kind of know what's my risk reward and my win rate and all those numbers, which doesn't tell a lot. All the expectancy, and it's very obvious where you're at. So but there are good tools for for kind of understand where you're at. With some practice, you kind of know your results kind of give you the kind of show you or tell you where you're standing. But I think each one of those dashboards are good for journaling. Okay. So that's for the AUD USD. We got also Euro USD, which similar to pound. Okay, we had that attempt to break to the upside. Again, we met supply. I remember saying I wasn't expecting this push to the high side. Okay, to the upside last week. Okay, we were like a support, and the way to approach that last week was more like a neutral zone. We have this reaction kind of nowhere. Okay, and last week when we were seeing that resistance, okay, this level here as a resistance, until there, for me was more obvious to sell, because there was no demand to push the market up to the upside, and we were actually breaking this hard to the downside, and again at nowhere we suddenly had that reaction to the upside. So that was something I couldn't foresee that. Okay, that was very unexpected. That movement, you can see it's a weak movement. There's no strength behind it. However, it continued. It broke to the upside. That was kind of the breakout, and then a continuation. We met the supply, and now we have to see if there will be enough demand to stop that movement to continue lower. Right now, we are approaching that demand area. So if you go to lower time frames, you can try to either you can trade this both sides. You can trade the reaction of the demand area, and you can try to wait for the pullback. That reaction will create a pullback, and then you can try to short that pullback into the second retest of the movement to the downside. Okay, so if you go to the 5-minute charts, you can either buy demand. Okay, you can see that it's a clear demand on 5-minute chart. You can buy the demand. That buying pressure will create a pullback on the 5-minute chart, and then you can try to short on supply areas. So you can either buy the demand or wait for that buy pressure to happen. That would be seen as a pullback on the 5-minute chart, and then to try to short that to the second test of the demand. Okay, so many times on these neutral markets, ranging markets, we have opportunities to make money both sides. It's just a matter of managing those trades. Okay. So that's going back again to the dailies. Yeah, there is supply. There is demand. I expect some reaction, but that's a strong movement to the downside. Let's see. Even if on the 5-minute chart looks a bit weaker, so we do have the push, but then you see there's no direct continuation. We have a lot of sideways movement, push down, sideways movement, push down, a lot of sideways movement. So this down movement on the 5-minute chart suddenly looks a bit weaker than I thought. So I would say there's a chance we react to this demand area, and we have a nice reaction. We have a nice reaction to that. But on the dailies, it still looks kind of sideways. I want to again see what's the strength behind the movements. So I'm interested in this pivot point and that pivot point. So I want to see how was the Okay, so again, what it looks like an attempt to break higher, and the formation of higher high, it didn't have a lot of strength behind it. So kind of mixed signals, right? We got a weak movement to the upside. On a 5-minute chart, we also have a weak movement to the downside. Okay, the reaction was strong, but then there was no follow through. There was no continuation. So we have weakness both sides. Weak upside, weak downside. That's the way I want to approach this market. Okay, then I want to be more like fading. I need to approach this market as a fading approach, more than trying to catch a trend, because there's no trend here. Okay, I'll try to fade the market rather than trying to catch a trend here. This one, USD franc, that's an interesting one. We're pushing strong to the downside, and I think we didn't cover this last week, but we're really trading low, very, very low on this market. And if we try to see how these movements to the downside have been formed, then we go to lower time frames and we try to analyze those. So we have a supply, we're just at it right now, and we have supply here, and that's kind of it. Okay, we see after that we have a lot of weakness here, and of course a lot of supply up there, but we're far from there. I want to see what are we. Okay, where's this movement to the upside coming from? Okay, so we see we're reacting to that area. Let's try to mark it. Let's look at closely. So we're reacting from this area right here. Now we can see this area was back then, okay, that was an important area. That was a strong movement to the upside, but it has been tested already, kind of completely tested. So I'm not very convinced by the bullish reaction right now. I think we have opportunities to sell this market and make some profits. So then I go to lower time frames. I confirm my supply areas, and those are there. Okay, I have this one and that one. The movement to the upside, this one is a strong one, so I want to wait for weakness. Okay, I don't want to just start selling this without waiting for weakness. So I'm already at the trading area, the area where I'm interested in being active, but this movement is coming from a strong movement towards the area I wanted to be shorting. So now I want to wait, I want to be patient and start looking for signals of weakness. So that would be creating a low and then a lower low, or tails in the bottom, or a little consolidation and then signs of weakness. So I don't want to be just like jump and shorting. I want to wait in this case, because the way the market came or entered the selling area, the supply area, was not in a channel in a weak way, but it was in an impulse, in a strong way. So in this case, I want to wait to be a bit more cautious, and then if I have the opportunity, then I'll try to short. If that fails, then you have the next area. Now the distance between the areas are 35 pips. Some cases, and if you start very, very small, makes sense to hold that. If not, you just kill the setup and we'll wait for the next setup, which is up there, and you wait for the opportunity to short that very clear supply area. And then again, it depends if the market rushes, to the upside, or compresses in a channel to the upside. Depending on how it approach that supply area, you decide either to just sell or to wait for some confirmation, which is what we're doing here. But as long as we stay below that supply area, I want to be bearish. I don't see what we're reacting at, unless that reaction, unless that movement is a news that I'm missing, and that is the the fresh demand. Okay, we're not reacting to anything, but that movement is the current demand creating all this movement to the upside. Okay, that was actually looks like a news movement. That let me see. Yeah, and that's today from the Empire State Index. So that was news today. It doesn't tend to be a very strong announcement. So you can see we had the first reaction, but then we had a lot of sideways movement. Okay, so there was not a lot of continuation. So I'm good staying on the bearish bias for this market. So that would be that. How is this looking? Still there, huh? So this is the patience we need to show. We need to weigh the market. We might go all the way. We have a little bit of supply right now. We might react to that. Then we might go all the way to the extreme supply, and then we might react to that. When I'm actively managing my trades, then okay, I attempt to catch the breakout. That didn't happen. The breakout didn't happen. Then how can I manage my trade? So probably I go to lower time frames and I short again. But that really depends on the sizing you're using. So that's what you need to be aware of. Eric, I prefer USD franc long, not short. I respect that. I mean, we all see different things on different charts. I just showed, I explained what I see. I don't see past demand. We are reacting. We might be forming this. These might be the, this today's news might be what it creates a long movement. Okay, a bullish movement. But looking at the pressure from the dailies, I just don't see what's the. I don't see what could be moving the market to the upside. Okay, we might need to expect or to wait for a USD news or a franc news that we have next week, and that might create fresh demand in order to reverse completely the market. Where I understand we are at the very bottom. Wouldn't make sense to sell at the very bottom of the chart, but I don't see any demand to buy from. So I need to wait for reversal patterns on the chart or reversal fundamentals to tell me go long. Right now, I just don't see it. But I respect trying to, probably in terms of risk reward, it makes more sense going long than going short. But in terms of win rate, for me, my bias needs to stay bearish unless or until I see a clear reversal pattern. Don't just that. 3 levels of evaluation is certainly hard to pass in bootcamp. How do one even pass just the first level? Yeah, that's a fair question. Doing just that. It really, I think the bootcamp is a great opportunity actually for that, for traders who are just starting out and they wanna test their skills and their strategy. That's where to do it. No time pressure and a very low entry cost to do that. Traders who already have, and you can ask, the conscious day trader here, he's trained on I don't know what level of bootcamp, but he started right there, and now he's trained, a couple of thousands on a bootcamp. So it's that process of finding your edge and tuning your strategy until you find, you get that for 6%, which is not a lot, and you have 6% and then you reset, you make another 6%. I would encourage you to go to maybe to a one-on-one portfolio analyst call, and we can try to review your specific situation and your strategy, and then we can try to help you out. Eric, two-step, we already have another program for a two-step. So we really wanna, as we're welcoming traders for a very low entry cost, we really need to make sure we see what they're capable of doing. And in two phases, I don't think that's enough. We need to see how they can scale their accounts. That's why you go from a 25 to a 50 to a 75K accounts. We want to see your sizing, we want to see your methods, we want to see your patience, and it's all part of that process. Million miles trading, I'm on level 3 in 10 days, sooner than I expected. Well, for you. Good for you. Glad. So this is it. If you're wondering how to pass the first level, that's the program to be in. Just because any other program would commit from you, would require from you to commit a higher amount of capital, and I think the bootcamp is a very good start. ZO had a bad start on first level, but building it up again. Yeah, keep doing. Eric, so you're doing good. Just stay calm, be patient, pass the third phase, and you will soon get funded. You will soon get funded. Okay, I think we're seeing that reaction. Okay, so on the hourlies, looks like a reaction to the, it's fascinating because you can have very different setups from every time frame. So on the hourlies, I see the reaction. It's only showing a reaction to the supply, probably a false breakout. Okay, from that resistance on the hourlies. On the 5-minute chart, that would be a pullback on the 5-minute chart, correct? That reaction might be only the pullback or the retest of the breaking area, and then the opportunity to go long. So again, every trader will approach the market in a different way. It's very important to just understand what works for you, what's your entry, and where do you close that trade, where are you wrong, and you need to admit that and just close the trade. I wouldn't mind at this moment on the 5-minute chart, I wouldn't mind taking a little short, a little long for the retest or the very next movement, which would need to have to be a movement to the upside, and then being very, very careful because I do expect the formation of a pivot and then a continuation to the downside. So that's those are the different scenarios you need to run in your head to understand whether more signals of, okay, my setup is going good as expected or less as expected, and then fine-tuning your training. The USD currency strength of stronger than franc at the moment is strength is at the moment, so that would be going up. But I'm not sure where. Probably I know there's a lot of heat maps and strength meters and all that thing. Again, those are good like indicators to kind of find your setup or what you want to attempt or how to approach. Myself, I'm trying all the way to catch the next movement because that's current, that's current information. That's what everyone knows. But if it's already that way, probably the next movement is the opposite to come. So just being aware of every scenario. The most important, if I'm long or if I'm short, where am I wrong? Where do I cut a trade? And wait for the next setup. Okay, that's fight your ego. That's the most important. US stability would help franc become stronger going forward. Yeah. So yeah, there you go. We have like reasons why going long, reasons why going short. Okay, and I've done this exercise with you and over Trade Delicious way as well. Just asking someone just randomly to tell me if going long or short on a certain currency, and as long as your management is correct, you can make money both sides. Okay, that's kind of the message. So just how this, okay, there you go. 5-minute chart, we got reaction to mid-terms supply. Looks like a nice reaction. I like this reaction because again, that's the same behavior we were seeing prior. Okay, weakness to the upside, strong downside. Weakness to the upside, strong movement to the downside. Weakness to the upside, strong movement to the downside. So that's a nice reaction. If I was actively managing, then that would be probably an area to enter short, and that here as well, another area to enter short. Let's see if we can confirm the breakout. Okay, now we need to wait. The reaction is coming from way up. Okay, so we're not like kind of at the breaking area initiating the breakout. Okay, the breakout movement was initiated all the way up there. So let's see if that follows through and continues as a movement. Okay, and on the 1 minute chart, it's the clearest chart. We have weak movement to the upside, very strong direction to the downside. So now that's a new supply on the 1 minute chart, movement to the upside, new opportunities to short the market. But I'll focus on the 15-minute chart. Let's see if we can stay to that. We have very soon we have previous support, so we might stop there, and let's see if all this supply is able to push the market all the way to the target area, which we said it's either there or there. Hard to tell. Okay, we'll see. But we need to break all that area, which it's going to take a little bit of time. Once I have confirmation that we are moving down, then I'll be trailing my stop to previous pivot, and when the market forms these new pivot points, then I'll be trailing my stop more and more. So what is your minimum take profit during the trend? Do you measure in ticks or in risk-reward? No, neither. I measure it in key areas or key level. So if I'm right now, I don't see a trend here. Okay, so this is not a good example because I don't see a clear trend here. But even on a trend, let's try to go to even on a trade, then I go from key areas to key area. So usually on a trend, if you manage to catch the trend, you will see your target in the past. Okay, what's the next key area that you can see on the past? On a range like this, then it's very easy to determine where you should be taking profits, because you see very easily where's the past. But if we go, let's say for the pound, and I'm going long, okay, I managed to go long, and I'm breaking these levels, then I need to look for my target back. Okay, so then if I was long, my target would be that area there. That's kind of the way I set my targets. Now when just looking at the charts, I kind of see if that setup makes sense in terms of risk reward, because you can, okay, I'm going long right now, I don't know, get out around that area, then my target would be there. Makes sense in terms of risk reward, but I don't set like arbitrary, pip target or something like that, and then decide if that's the correct risk reward. I go from key level to key level. Yeah, and the stop's the same, okay? And for this example, it's exactly the same. So my stop needs to be above or below the key area. So if I'm trading this area and I'm going short, I need to be, my stop needs to be above the key area. If the market goes, to that area and I short this area, my stop needs to be above the key area. Okay, because all around the area, all inside the area, we might see a lot of movement, okay, and false movement to the upside, to the downside. So I want to make sure my stop is above, okay, in the opposite side of the key area. Okay, guys, I think that's for today. Again, market's kind of neutral, slightly bullish USD, slightly, but always keeping in mind all these high impact news event and all this high impact event will have repercussion in the market, and those might create new trends and new demand and new supply areas in the market. So I want to be aware of those. With that, I think, thanks for coming, thanks for staying. We'll wrap up this session. I'll make sure to see you next week, and if you haven't done so, visit Traders Day Live. You really want to be there, guys. See you. Bye bye.